Okay, I wanted to do a very quick review of where we stand with regard to the S&P fuel gauge, because for the past 4 weeks or so, it's been stuck here at these levels in this kind of 30, 25 to 30 range. So the question is, what can get us out of this range? This decline didn't do it. It wasn't significant enough. Another day of that would have done it. That might have pushed these numbers higher. But it wasn't enough. Now, I did get buy signals here, short-term buy signals anyway, but they weren't driven specifically by gauge levels. So we can break out this index into two components, fear and bond momentum. So we know that both of those things are positive for future returns. You can see how bond fear has been pretty consistent, and then it hits this wall here when you finally get beyond the trauma window, too far beyond the last trauma moment. And so here was when we hit beyond day 20, and it'll keep on going down, this factor, unless VIX or its synthetic version rise. So this is going to be a struggle getting this number higher unless we see a big jump, big decline in the market or a jump in VIX. Now the second thing which we're following course here is bond momentum, and you can see how that was a problem here, was contributing nothing to the gauge, and only lately, because bonds have been doing better, it's now a bit of a help. And that's what's holding this gauge up above what would otherwise have been something at a dismally low level around 15. If we'd taken bonds, the component here, and left it where it was, and this fear level fell down to this level here. So bonds are helping us a bit, and that's why we're kind of not getting short signals from the gauge. One last thing I follow is fear, or in this case synthetic VIX, divided by volatility. This is not an attractive story. It's not a guarantee that you're going to get mediocre returns, but it's really a bit of a problem. You usually don't get good returns when this variable drops below this kind of level that I've marked here. It is rare to get a sustained rally here. It can happen, but it happens only when you're really inside this post-traumatic window, post-trauma window. You have to be in days, 1 to 10, and right now we're on day 33. That's not a healthy place to be, and to have this reading so low. So I keep an eye on this with regard to short-term trading. If you trade hourly or short-term, this is something you do want to follow.